So for a lot of families, it can feel like money is constantly going out the door, whether it be for childcare, school, diapers, activities, whatever it is, just doesn't seem like a lot is coming back in. So this week, we're covering three credits that the One Big Beautiful Bill enhanced to put more money back in the hands of families: the child tax credit, the child dependent care credit, and the adoption credit. Let's jump right in to see those details. The child tax credit has been around for years, but it was set to expire at the end of 2025. And instead of disappearing, it got bigger. The credit increased from $2,000 to $2,200 per child starting in 2025, and it will continue to increase with inflation going forward. The refundable portion, the additional child tax credit, increases from $1,400 to $1,700 per child. This is the piece that can come back to you as an actual refund, even if you don't owe taxes. It will also increase annually. The refundable piece matters most for low and middle income families. If your credit is larger than your tax bill, the refundable portion means you can still receive the difference back. Phase out starts at $200,000 for single filers, $400,000 for married filing jointly. Practical takeaway for most families is if you have children under 17 and fall below those income thresholds, you're getting more back than before, automatically, without any extra steps on your part. Childcare costs is one of the biggest expenses young families face, and this credit just became more valuable for the people who need it most. The expense limits didn't change, up to $3,000 in qualifying expenses for one child and $6,000 for two or more, but what did change is the maximum credit rate. It increased from 35% to 50% of qualifying expenses. That means the maximum credit goes from $2,100 to $3,000 for families with two or more children. And the households that benefit most are those with an adjusted gross income of roughly anywhere between $30,000 and $100,000. That's the range where the higher rate has the most impact. This is important to know. This credit is non-refundable. It can reduce your tax bill to zero, but it cannot create a refund. If you don't owe enough to use the full credit, you won't get the remainder back. There's also an improvement for families with employer-sponsored childcare benefits. The dependent care exclusion increases from $5,000 to $7,500 for married filing jointly. If your employer offers a dependent care FSA, an account we've talked about before, the amount you can set aside tax-free just increased. Even with these improvements, this credit remains modest in scope for most families, but the increase in the credit rate is a real improvement for middle-income households. Adoption is one of the most meaningful decisions a family can make. And for the first time, the tax credit tied to it is now partially refundable. Previously, the adoption credit was entirely non-refundable. It could reduce what you owed, but if your tax liability wasn't large enough to absorb the full credit, the remainder was lost. But under the new law, up to $5,000 of adoption expenses can now come back to you as an actual refund on your return, even if you don't have enough tax liability to use the full credit. Adoption expenses can be significant: legal fees, agency fees, court costs, travel, and families often face some of these costs in a year when income can be uncertain, potentially disrupted. The refundable piece provides relief in a way the old credit simply didn't. So if you're in the adoption process now, or planning to be, track every qualifying expense and make sure whoever prepares your return knows about this change. It matters. So whether you're raising children, paying for childcare, or growing your family through adoption, the tax code just moved in a direction that puts more money back in your hands. And these credits all interact with your income, your filing status, and your specific situation. So if you want to sit down and look at what this means for your family specifically, I'd be glad and honored to do that. You can start by clicking the link below to schedule a call. Next time, we're covering Trump accounts, a brand new type of savings account for children that just became available this year. This one is unlike anything that's existed before. I'm looking forward to seeing you then.